A coffee shop felt like a good place to conduct an interview of this magnitude, because the information you're about to get over the next few minutes might need some help digesting.
There's billions of dollars, trillions of dollars just sloshing around in the economy looking for places to go. What are we going to invest in? Real estate's a really, really good investment.
Mike Delprete is a global real estate tech strategist and a scholar at the University of Colorado Boulder. He says there's been a rise in companies buying single-family homes to rent.
How big and significant is this issue?
It depends how you look at it. It is definitely an issue worth paying attention to.
According to Pew Charitable Trusts, a nonpartisan and non-ideological research organization based in Philadelphia, investors bought nearly a quarter of single-family homes purchased in 2021. Since 2012, that number has been between 15 and 16%, making 2021 the fastest year-over-year increase in 16 years. Last year, in 2022, that number was even higher.
The roots of the industry kind of came from the foreclosure crisis in 2000, 2008.
Jordan Ash is the housing campaign and research director with the Private Equity Stakeholder Project. He points out what these investors are doing is not illegal. He says it's good business. He also agrees it affects the number of available homes for everyday people to purchase. According to CoreLogic, a data firm that analyzes financial and property information, only 15% of homes purchased by investors in March of 2022 were resold within the following 6 months.
It's a bipartisan issue in terms of the concern that both Democrats and Republicans have expressed concern about it, is because it really is directly impacting people's ability to achieve the American dream. That people are being shut out.
It's worth showing how these investors are splitting this pie. The CoreLogic data shows of the 26% of homes that were purchased by investors in the third quarter of last year, 49% were small mom-and-pop investors, 33% were medium-sized investors, 8% were large investors, and 11% were mega investors who own more than 1,000 properties.
At its very base, it's going to make it more difficult for buyers to buy homes because, people like you and I, if we're looking to buy a home in Atlanta or Phoenix or any of these markets, we're competing against institutional buyers. They are, by definition, cash buyers. They don't have mortgages. They don't have contingencies. They've got briefcases full of cash ready to go. And their job, like the people you're bidding against, their job is to buy houses. So who do you think is going to win that bidding war? It's going to keep going back to the institutional investors.
We went to the National Rental Home Council, a trade group representing many of these mega investors, for comment. They told us that these mega investors own less than a third of 1% of all the housing in the country. However small, Ash is still wary of how much of an impact these mega investors may really have.
There are entire communities that are now, kind of being shut out, where these corporate landlords are basically extracting the money that would have been, from individual families being able to build equity.
In late October, 3 Democratic House members from California introduced the Stop Wall Street Landlords Act. The bill would deny certain tax benefits to investors whose assets exceed $100 million a year. State legislators in Ohio, North Carolina, Georgia, and Arizona have also introduced their own bills since December that would limit the amount of homes investment companies could purchase.
This is very nuanced. Institutional investors, on the other side, they're a backstop to the entire housing market. When people can't afford to buy and sell houses, they're there. They're buying. That is important.
It's a lot to take in, with many sides who don't all agree on the degree of impact. Hopefully the coffee allowed you to digest it with a bit more context, clarity, and understanding. Dan Grossman, Scripps News, Denver.